to today's morning report chart analysis videos on Thursday the 26th of October with me, Rich Market Analyst at Hantec Markets. It is the ECB day and it's going to be an important ECB meeting today. This is the day that the market is expecting Mario Draghi to announce a taper of the asset purchases. The asset purchase program ends in December. The current program is running at 60 billion euros a month of asset purchases. That's expected to be extended, but also tapered by probably around about half, actually, in terms of the asset purchases per month to around about 30 billion euros, extended for possibly according to consensus, around about 9 months. But look out, I think, for the total number of assets purchased being the sort of key driver towards whether the market sees it as a as a hawkish or a dovish announcement. So that is basically what the markets are sort of concentrating on early doors today. We're sort of looking out for the dollar, which is sort of fell away yesterday. The sort of speculation over the next Fed chair has been a bit of a driver of the dollar in recent days. I think it's a near-term mover of the dollar, but certainly I think it pulled back yesterday on the suggestion from Donald Trump that his working relationship with Janet Yellen was still pretty good, and that if Yellen was, say, for example, his choice, that would be considered to be a bit of a dovish move by Trump. And subsequently, the dollar has fallen away. In terms of your treasury yields, though, still pretty strong on the yields. On the the 10-year yield breaking up above 2.4% is a key move still, and the 2-year yield continues to pull higher as well. So the dollar just pulling back a little bit in front of the ECB as well. You've got the ECB meeting, which is going to be a big driver of the euro, and subsequently moves on the dollar, and the dollar index will be accounted for through that. We also had the equities in the States yesterday pulling quite lower. For the first time in a while, actually, we saw sort of pressure to the downside growing. S&P 500 sort of bounced into the close, but certainly still down on the day, about 0.5% down, following on from weaker than expected results from Boeing, which certainly had an impact on the Dow. But the markets are sort of fairly settled today. The euro is basically flat on the day, nothing doing there, nothing massively doing on the yen either. Sterling has unwound some of the gains that we saw yesterday from the stronger than expected GDP data. Gold is broadly flat, although it has bounced slightly on the back of the slight dollar weakness. Equity markets that have stabilised after a disappointing move to the downside that we saw yesterday. So, as I said, my expectation is that the ECB will be the big mover of the day. Certainly the rates announcement at 12:45, and also then the press conference for Draghi at 1:30. You got weekly jobless claims and pending home sales. Other than that, but they will not be especially market moving in light of the fact that the ECB press conference will be going on throughout the jobless claims, but also the pending home sales at 3 o'clock, which are unlikely to be too much of a market mover either. So the pending home sales are expected to grow by 0.2%. So my chart today is sterling yen. Now this had a strong break to the upside, but it was moving up to the on the upside anyway before the GDP data yesterday from the UK, and you can see this pivot here at 149.10, having been supportive, it became resistance, broke out on Friday last week, then became supportive, and certainly the move to the upside yesterday has sort of bolstered that support. Now I think this is a move that looks to be strong, looks to be one that it seems to be that the market is buying into weakness. You've got the initial pullback today, but I think looking at these momentum indicators, there is still sort of move to the upside, and having broken, as I said, above that pivot, I think anything sort of that finds support above this 149.10 mark, I think is going to be seen as a chance to buy. It's basically just pulled back. You got the initial support at 150 spot 10, and that is an old long-term. Sorry, going back too far. An old pivot over the past sort of couple of months, really 6 weeks. is 150.10, so that is supportive initially, but 149.10 being that breakout from October trading, where we see it around about there. 149.10 is certainly a level I think the market will be looking out for. So weakness will still, I think, be seen as a chance to buy. You've got these trend of higher lows in recent weeks, and there's positive momentum indicators as well. So as sterling just unwinds a little bit today, it could produce a little bit of a buying opportunity. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later. Thank you.